The market throws us a curveball, but we're able to ground it into left field for a single. This is Invest with Jacob. Okay, guys, so they shot higher in the pre-market yesterday on the CPI data release and then spent most of the trading day giving back a big chunk of their gains. It did shoot higher than the targets we gave out in yesterday's video, and the difference between somebody who tells you what they think the market is going to do and a trader is risk management. We had put on a hedge the day before CPI just in case it got crazy and shot higher like it did, and made a profit on that hedge. Then the market came back down and our short position is doing well also. Now the question is, since it overshot our targets, where do we go from here? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, we don't just teach Elliott Wave Theory in our trading room. I also teach you risk management, proper trading, hedging, all that type of stuff so that you can grow your portfolio just like we are. So if you're interested in that, stay tuned for later in the video. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and you see the huge spike we got up early in the day, and then they spiked it back down throughout the day, giving back almost all of that candle and a little bit more than that as well. So this does give us a couple different paths that we can look at, and we do have another huge catalyst tomorrow with the Fed in the afternoon, so we'll have to watch that as well. But essentially what we're looking at is a couple different possibilities. The running flat that we had talked about before, okay, that we thought had ended here at this red 5 and gave us the wave 5 up we thought we were going to get, okay, could be an expanded B wave. And so what you would see is A, B comes up higher, and then C down to give us that wave 4. So we have an expanded B wave here, and then a move up in 5. And remember, the target that we gave for this move up originally was 4150. And if you take the 30-point contract rollover off of 4180, you're exactly at 4150 like we said before. So that is the primary count that we are favoring right now, that we have completed 5 up in A, okay, and that we are on our way down in this B wave from there. So I do favor that count, but it's not by a lot. Right now I don't have something that really stands out because the market did throw us a bit of a curveball today with that shoot up on the CPI data. So with that, we do have to give it a little bit of time to shake out so that we can see exactly what's playing out. But I do favor the move down still toward the 37 to 3800 area as the most likely path from here. Now, the secondary path and the alternate path, which isn't too much different, is that we had a running flat here after completing the A wave up. So in this case, okay, the A wave that we're looking at would be done here, over where this 3 is. The B wave would be done here, and we're on our way up in C already, where this would be wave 1 up. This would be wave 2 down. Okay, it held the 618 today. And then we would be looking for a wave 3. Okay, and remember wave 3s. Okay, so we would have wave 1 up, wave 2 down. And we got to count all the waves in wave 3, so we'd look for a 1, okay, 2, and then wave 3 should target 3 of 3, I should say, should target 4350 or so. Then we'd look for a pullback from there, and then another move up towards 4450, pullback, and then a final move up towards the 4550 area to complete that C wave higher, which would also complete this B wave. So that is the secondary path. We do have a very strong catalyst tomorrow, and if they decide to take it higher, this path could play out very quickly. So we do want to watch what happens with that catalyst, the Fed, in the afternoon, and see if we do get this 1-2 set up. So you already have the big 1-2. You can see the big green 1 and 2, and then this 1-2 is what we look for. So when you have a 1-2 in place, as we potentially do now, if you use your trend-based fib extension tool and you draw from the bottom of 1 to the top of 1 and then to the bottom of 2, it gives you these fib levels here that I have on the screen. And when you have those, you can give yourself targets and also failure points, which is very important. So if we have these fibs here, okay, what we would look for is a 1 of 3. So this spike up right here usually targets the 0.5 to 0.618 retrace, or I'm sorry, extension of waves 1 and 2. So that'd be 4158 to 4189. Then you'd look for a small pullback. Then you'd look for a breakout over the pivot. And if you've been watching the videos for any amount of time, you know the pivot is the 618 to 764 extension of waves 1 and 2. And a move over 4228. okay, would signify that we are trying to break out in this wave 3 towards that 44.50 area. Then we'd look for 4 down to 42.90 and so on. So this setup you would look for maybe in the overnights to play out, where they try to come up a little bit, give us a spike down on the Fed and then a spike up. That could play out that way. Or we could just see the move down. As I said, I would favor that as my primary path, only slightly until we see what this catalyst gives us. But those are the two paths that I'm looking at. The third path that I will throw out there, just to keep in the back of your mind, it is possible that this was the entire move up and we are on our way down in a big C wave sell-off that would make new lows. If that is the case, we would break through that 37 to 3800 support area, and once we break through 3700, then it would start to look very much like we are going to sell down toward that 25 to 2900 area I've been talking about in the videos if you've been watching for any amount of time. So that is something to keep in the back of your mind. If they do start to sell it down, a break of the 3700 area is a big deal, and we should be paying attention to that. So again, big catalyst tomorrow with the Fed that should give us some idea of how this is going to play out, and we'll see where we go from there. Over on the NASDAQ, okay, the NASDAQ's a little different than the ES just based on how these intermediate waves played out right here, where they didn't necessarily make a new high, but you would still have the same 3, 4, 5 setup to complete wave A. Then we'd be looking for that B wave down to the 11,000 area from here, so that continued sell-off off of the close. We would look for them to continue to push down toward the 11,000 area, and then a move back up toward the 13,000 area in wave C. So again, that path, guys, just so I'll draw it on here for you, that path would be that we've already started down in this move, okay, and we get an A, B, C down for B, and then this C wave back up towards 13,700 or so. So that's the primary on the NASDAQ as well. The secondary would be that we are trying to play out that bullish pattern, and on that, we already have 1 and 2 in place, and we have our fib levels that we just talked about on the last, on the ES. And now we would look for a move up toward the 12.3 to 12.400 range for a wave 1 of 3, then a move down in 2 of 3, and then we'd look for a move up toward 13,000 for 3 of 3 from there, and then a pullback and a move up, and then ultimately we would look to get up toward the 13.7 area if that played out. So again, big catalyst tomorrow with the Fed. That will give us a very good indication of which of these counts we're on. And from there, we can kind of adjust. These big catalysts like CPI and Fed, I don't like to play in one-way direction. So we already had a longer-term short position for the ES. And so we did hedge with the long, and we'll do that again for the Fed. And so once the catalyst plays out, those are usually good milestones for where we're at in the bigger picture count, because they get us to where we're supposed to be and break out of all of this range we've been trading in for the last, couple of weeks now. So I expect the Fed to give us the catalyst we need to clear up our path and show us which way we're headed. And then from there, we can adjust and trade accordingly. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial, because I want you to get in there, make sure you love it, and become part of our trading team before you ever spend a penny. You can cancel at any time. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, as well as a midday video where I go over exactly where we're at in the counts and what to expect moving forward in the day. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a small price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can make some money together. All right, key takeaways for today. We're kind of waiting on the Fed unless we get some overnight catalyst. Very unlikely with the Fed tomorrow. Should see a lot of chop. So we're waiting on the Fed to give us some direction on the market, whether we get that spike up to give us this continuation of this 5-wave pattern higher, or we get the spike down to give us that B wave that we're looking for to the low side in the 37,300 region. On NASDAQ, same type of thing, looking for that spike higher to complete or to continue this 5-wave pattern up toward the 13,000 level, or we're looking for that spike down to give us the move into the 11,000 level. Guys, that is the market update for today. I will talk to you tomorrow.